What up? What up? What up, everybody? Welcome to today's session here. It's going to be a good one. The closing last week, speechless. A lot of things happening right now in the market. So we're going to chop it down. We're going to break it down for you here, guys, with Mark Putrino, Chief Educator at Benzinga Trading School. Okay. So we're And I believe Mark is somewhere in here. Um, Let me just tune in here.
I'm here.
All right, hold up 1 second. Hey,
Hey. Hey, Rodrigo. How are you?
hey, what's up, man? How you doing? How's your
I'm doing
weekend
good. How
going?
are you?
Man, what's happening right now is, I'm a little bit dumbfounded here. A lot with, what's going on in the markets, this whole Omicron variant. It seems like the global markets took a dive. Like I even saw the French market down 4.7%, almost a full five. So, um, yeah, it's Hey, Mark, can you hear me?
Yeah. Yeah. How's it going, Rodrigo?
Good, good, good. Sorry, yeah, I just had a little disconnection there on my screen, but
Okay.
you
Well,
could
you
go
know
ahead
what?
and take the screen if you want.
Oh, yeah, sure. I'll take the screen. You know, I all right. So you can see the S&P 500 now up here. I just want to make sure.
Yeah, yeah, yeah. But
Okay,
before we
cool.
get into all that, but yeah,
All
we
right.
have we have a lot of folks here. Before we get into all that stuff, all right. So Antoine says hello. Milton says hello.
Hello,
Alex.
everyone.
Yep, yep. We're here, guys. We're here, guys. We're gonna chop it down for you. Um, So, Mark, I mean, number one, before I know we're excited to get this started, okay, but just give us a brief introduction here of your background in Wall Street for those that don't know you already, um, and
Okay,
how why we're here for what we're here doing today as well.
sure. Well, my name is Mark Putrino. I'm, as Rodrigo said, the head educator. We started the trading school in September, so it is new. My experience is pretty extensive in the institutional world. My first trading job in the institutional world was working for Mario Gabelli, who's a really well-known money manager. I was actually a market maker for him, and not to get ahead of myself, but I can tell you probably most of what you think about market makers, what market makers do, is not true. Um, but so because market makers get blamed for a lot of things, but we're going to open up the floor to some questions later, and you can ask if you want. But I spent some time working for Gabelli, and then from there I went over to work for someone who else you might know, a man by the name of Steve Cohen, who is the head of SAC Capital and one of the greatest traders, not only of our day, but in the history of trading. And from there, I left and went to three different institutional money managers where I was the head of trading at each place. And they were big money managers. I had people working under me. We managed billions of dollars. I oversaw a lot of different trading strategies. But about 5 years ago, I just decided it was time for a career change because you could be you could be the greatest trader in the world, but if the portfolio managers are not doing a good job managing the portfolio, you're going to, not do so well. Like you could be the greatest offensive lineman in the world, if we want to put it into a football analogy. But if your quarterback isn't that great, or sucks, you're never going to go to the Super Bowl. So about 5 years ago, I said to myself, you know what? I want to do something else. I didn't really know what I wanted to do. I almost ended up taking over my stepfather's business, believe it or not. He owns a garbage and recycling business, so that would have been very different. But then I decided that I wanted to be a teacher because I see all these misinformation out there, especially about trading, and a lot of nonsense, which causes people to lose money. And it goes anywhere from the from the I guess the inexperienced to the downright fraudulent. So when I started the school, my idea, or not just my idea, but the idea of Rodrigo and Neil, is to teach what institutional traders see in the institutional world. All right, and we are focused on supply. We are focused on which levels are important, which trends are important, and what the momentum is. We're not really worried about esoteric, strange things. It doesn't need to be complicated. You could just concentrate on some basic principles that we teach. And this is a class to teach. This isn't like, check in each day for a trading idea kind of a thing. We talk about various trading ideas, but they come like organically as we talk about the market. Some days we might come up with a bunch of ideas. Some days we might come up with less ideas. I will let you take a look at this screen. You can see now, if you can see this S&P 500.
Yeah, we can see
Okay,
it
cool.
clear. Yep.
All right, so this sell-off did not come as a surprise to me and the students in the class. It just didn't. Okay, we always talk about how markets move in trends, and there are certain levels that are more important than others. So a trend line is something that you draw on a chart, like this blue line here is called an uptrend line. What this is when, let's just think about this logically, okay? When a market is rallying, what's going on? The price is moving higher. Each one of these rectangles represents a day of trading. These are called candlesticks. A blue day is an up day where the closing price is higher than the opening price. A red day is a down day where the closing price is lower than the opening price. So the class and I have been following this S&P 500. It's SPY, but it follows the S&P 500. This is the SPY ETF. And back here on November 9th, well, what happened? Well, this uptrend got broken. What does that mean? Quite simply, the price is no longer going up. Let's look at this day here. It's a down day, but the price is still higher than where it was a few days before. Same thing here. The price is still higher than where it was a few days before. So it's still trending higher. But on this particular day, November 10th, we broke this trend line. So what does this mean? Well, quite simply, the price is not going higher anymore. That means the bulls have lost control. They're no longer in charge of the market. The bears have become, in this case, equal or equalized. So the market started trading sideways. Then we saw this other trend break on November 23rd, which was, I'm kind of lost track now because of the holiday. But that was what, Tuesday? So early last week on Tuesday. So we saw this uptrend broke. That told us that we were going to get a sell-off. Now, I didn't know this whole variant thing was coming along or anything like that. But just based on what we saw in the market, we were not surprised that we saw this big move lower. Now, there's a good chance that SPY could fall to 453, which I think it does. But, this is not the end of the world. The market closed on Friday at the same level it was at on November 1st, a month ago. So it's not like there's this great cataclysm going on. The market just retraced some of its gains. It's a healthy thing in a market. Whenever something goes up, there's always going to be some kind of profit taking. So I don't know how what this new COVID variant is. My sense is that Friday was a complete overreaction, and I think we're going to see a rebound, especially if SPY gets all the way down here to this 453 level, which is pretty much just one more day like Friday was in terms of a percentage.
So
All right.
just to fill in the gap here, so what happened was that a new variant from South Africa has been, it was named, it was labeled as a variant of concern by the WHO, right? And apparently it's likely that this will be vaccine resistant and deadlier than this. So a lot of countries have shut down trips from South Africa, and the technicals would have told you that without the news coming out, which but we definitely want to help people prepare in case there is more downside, Mark, here, especially
Yeah,
for the students.
and we'll know, and I'm going to show people, what to look at. And look, I don't want to downplay this whole variant thing because I know, it's a terrible thing, and we're empathetic to the people that suffer and lose their lives or their health. But that being said, we also need to understand that the media tends to blow things out of proportion. So we got to that's why the next days are going to be kind of like important. There's two things which tell me that the market could rebound. Now, I'm not saying like, rebound and soar to all-time new highs. Maybe we keep going lower. Maybe this, variant becomes, really bad and it brings the markets down. But what I'm suggesting is that I think over the next few days, Monday, Tuesday, Wednesday, we might have a chance to see a meaningful rebound, which is a tradable rebound. You can buy, things go up, a few days later you sell. There's two key things I'm looking at. And not surprisingly, they're the two, probably arguably the most important stocks that there are, Apple and Microsoft. We were watching these last week because technology was leading the market higher. But then, like on Monday and on Friday, we started talking about how technology started to look a little bit vulnerable because it was getting overbought. Overbought is an expression that traders use, which you've probably heard before. Stocks have every stock has its own personality. And part of that personality is it trades within a particular range. It's just what would be its average or typical normal trading range. If something gets really bought aggressively and gets above that range, we call that overbought. Why is that important? Well, the reason why it's important is because things that get overbought or oversold tend to reverse. They tend to go back the way they came from. So when something's overbought, traders are looking for it to sell off. And when it's oversold, traders are looking for it to rebound. So let's just take a look at Apple and Microsoft, which together are 1/8 of the entire stock market in terms of their weighting. The S&P 500 is 500 stocks, but these two stocks are 1/8 of it. So that's why they're more important than others. So here's one reason why I think we may see a rebound. All right. This is an interesting thing about the stock market, or really all financial markets, and we can see this at a lot of different places. In the class, there's 8 classes that I teach, and each class covers a particular fundamental of the market. And in the morning, we talk about the class and the fundamentals, and then we look at the actual market and see how to apply it. This is different than most classes because most classes, they're looking at a chart, from last year, and it's hindsight's 2020, so forth. But anyway, that's one of the things that I think is appealing about the class, is that we look at things in real time. So we have our class about how certain levels are important. Sometimes we know why a level is important, and sometimes we don't know. Now, levels that were resistance have a tendency to convert into support. All right. There's a reason for this. It's called seller's remorse. Investors that sold here thought they did a good job, but when the stock finally rallies and goes higher, a lot of these investors regret selling it, and they say that they want to buy their stock back. As a result, they place their buy orders at the same level they sold at. All right. So this is an example where resistance could become support. Now, I'm just going to digress for a second to Amazon, because this is a good stock which shows how certain levels are more important than others and how resistance can become support. Because I know if you're new to trading, that might sound like a bizarre concept. And frankly, it kind of is. It's hard to explain academically, but yet we look at charts and we see it. So let's just take a look at it at Amazon. Okay. We see here what was clearly resistance, 35.30, became support. It was resistance here as well. So we have sellers sold, sellers sold. They thought they did a good job when the stock went lower. Then it rips up through their level and they say, darn, I shouldn't have sold it. I want to buy it back. So if they have enough of these remorseful sellers placing buy orders at the level they sold at, the level converts into a support level. That's what happened here with Amazon. So let's go back to Apple. There is a good chance we see this same thing happen here. Apple has dropped to a level which was previously an important resistance level. So just like we saw on Amazon, if there's enough disgruntled or remorseful investors who sold trying to buy back at the same level, it could turn this 157 level into support. That means there'd be enough buyers here to hold the stock up. It's not going to go any lower. Of course, this may not happen, but this is what we're going to be focused on tomorrow morning. If it looks like Apple is going to hold, there's a good chance the whole market comes back. Other thing is Microsoft. Okay, Microsoft and Apple, the two biggest companies there. Now, look at this one. Levels that were support in the past, and when I say support, I mean there's a large concentration of buyers there. All right. Levels that were support in the past can become support again, just like a resistance level can become support. Let's just go back to Amazon real quick. All right. Look at this level down here, 31.90. We can see it was support here, support here, support here. This is what they mean when they say, whoever they are, that markets have memories. It means a level that is resistance or support can be so for a long time. Now, if we come back to Microsoft, we have it's sitting on this 330 level, which is support. All right. So it isn't complicated. We're not talking about, exponential moving averages or, I don't know, calculus or higher mathematics. We're just looking at basic common sense. We have one stock has fallen to what has been support in the past, 330. We have the other stock, coincidentally, the two biggest stocks in the market, has dropped to a level that has been resistance in the past. So if these two stocks hold these levels, that tells me there's a good chance we're going to see some kind of a rebound earlier in the week, maybe starting tomorrow. So real simple thing we're watching here. Just how do these, you see, in the class, we never guess. We don't guess what is going to happen. People say to me, well, Mark, you make all these great calls and, market direction. How do you do it? And it's like, I don't. I just talk about what the market is showing us. I'm not saying, go bet the house that, go to remortgage your house because I think Apple's going to rebound. But what happens when stocks get to important levels, they tend to make a rapid move one way or the other. They don't generally hang out at an important level for a long time. It's like they get to a, like a crossroads, or you're hiking in the woods and you come to a trail. You can either go to the left or you go to the right. You're not going to sit there and be like, oh, which way should I go? Which way should I go? We could get a significant rebound. We could also have a significant breakdown. But going into tomorrow, I will be watching how Apple and how Microsoft navigate these two important levels. And I think from that, we can get a clue into what is going to happen in the broader markets. So two things to watch there, Apple and Microsoft. Now, why did we watch Apple and Microsoft as a class? Well, we always kind of do because they're really important. But certain things drive the market at different times, okay? I'm going to first bring up the healthcare sector. This is a way that we look for trading ideas. We can go through sectors, and if we see something is going on in the particular sector, then we look at stocks that are within the sector to look for interesting plays. All right. So a month or two ago, when the S&P was rallying, one of the driving forces was the healthcare sector. This is XLV. This is the ETF which tracks the healthcare sector. So this thing was a really big driver of the market from the middle of October to early November. But then it just started trading sideways. So now healthcare wasn't really an important thing to watch in the sense of what it would do to the broader markets. It just kind of went sideways. But now let's look at the technology sector where Microsoft and Apple live. Well, we saw this trend break on, so that's Friday, that's Wednesday, that's Tuesday. So on Monday, oh, and we even talked about this in the class on Tuesday. This was a big reversal here. In the morning, XLK opened higher around 172. It got all the way up to 174.25. It looked like it was going to be another up day, but by the end of the day, the bears had come in, overpowered the sellers, and drove it down. By the close of the day, it was significantly lower, and it was even lower than where it was the prior day. So we recognized this trend break earlier this week. So again, I'm not, I didn't know this whole COVID variant thing was going to hit the news or anything like that, but the markets looked like they were positioned to give back some, and that's not unusual considering how far they've come along. Markets don't just go straight up.
Mark, do you think it's fair to say that the initial drop right on that news was when it broke the trend, but then other investors followed? Is it possible?
No, the trend was broken before the news came out, right? The news came out here. This is Friday. This here is Wednesday, but the trend was broken between Monday and Tuesday. So, I think we have to be very careful when we talk about, is the news really driving the stock market as much as the media talks about? And in most of the cases, it's not. Like I said, we were looking for a sellout. We didn't know this COVID thing was going to come out, but the trends were all broken, on Monday and on Friday. This reversal day here, let's see. Again, I'm a little confused because of the holiday, but all right. So this is Monday. We have this big reversal on Monday, right? This is Tuesday. So we broke the trend on Tuesday. This is Wednesday. Then we have the day off, and then this is Friday because Thursday was an off day.
It's pretty interesting how the technicals work because you've been looking at the markets for some time. I attend some of the classes in the morning because they start at 7 in the morning, so I do have that time. But I had bought some puts on the SPY unrelated to this news, just because of the technical breakout. But it's something that we definitely appreciate as retail traders. That you help us navigate through these times. They're very confusing for us for sure.
Well, let me tell you something, Rodrigo. I've been following the markets for like 25 or 30 years, and I've been thinking about this stuff for 25 or 30 years. It's like, what comes first? Is it the chicken or is it the egg? And it's like, did the market know this whole COVID thing was coming? Is it just a coincidence? I don't know. I really don't. It's really mind baffling. But I will tell you this. I think for me personally, if I shut off the news and didn't pay attention to the news and just traded on my charts, I think I would do well because I'm not letting the media tell me what's going on. I'm letting the market tell me what's going on. Listen, man, this is the stock market, right? XLK goes from 150 to 172 in 2 months. There's going to be traders that want to take profits, that have nothing to do with the market. It's just, they want to take profits. They saw this big reversal. Let's look at it this, like, let's pretend that we have the blue army and the red army, right? The blue army is in charge. Even though the red wins a couple of battles, the blue army is still pushing ahead. On Monday, we had a big update in the morning. Had you looked at the market on Monday morning in this technology sector, you would have said, oh, it's another big update. But then say you went and you ran your errands or did what you had to do and came back after the market closed and looked on, it's like, oh, wow, it's a big down day now. What happened was it reversed. They call these reversal days for a reason. It's a one-day change in the trend. The trend was going up. It looked like in the morning it was going to continue to go up, but by the end of the day, the forces of supply came out and overpowered the forces of demand, and it ended up closing down. The next day, it was down even farther. So this tells us that for the time being, the rally is over. Its stocks just aren't going higher. We're just looking at the market. It was going higher here. We don't really need to have this trend line. It just makes it easier to graphically see it. This change here. So yeah, there are other things we looked at. As a matter of fact, one of the trade ideas we talked about was how DuPont was looking so weak, and a couple of I know I can't think of the students' names or which students it were, but I know we talked about this as a potential short idea. And the thing is we always kind of want to have more than one idea out there. Some traders get too, myopic or too singularly focused, especially newer traders. Like they buy like one thing and that's all they watch. Well, in a perfect world, you always want to have a couple short ideas out there and a couple long ideas out there at the same time. Because if something really big happens, and like the market makes a big move down, like it did on Friday, well, then some of your positions are going to work, and some of them won't. You always kind of want to be, what we call market neutral, where you have some shorts, some longs. That's what we've had. But one of the shorts we had was this DuPont, just because it looked like it just, it skyrocketed and then it crashed into this wall here of around 81, and it just started to look really weak.
Hey, Mark, I'm not sure if you're showing that chart, but
Yeah,
are you showing it? Because we're
yeah.
only seeing the SPY 4-month chart.
Huh. Maybe you're having a little bit of a delay, because right now on my chart, I see DuPont, DD.
Okay, let's ask the chat, guys. You see DuPont? Okay. You see DD? Okay, all right, so it's definitely my thing here. All right, never mind.
All right, cool. So anyway, so this is something some of our students made some money off of. But let me show the students this Twilio trade that we just did, because this was really just a textbook, like what we like to do as a class, or at least what I like to do, or what I like to teach. And this is not an idea that I came up with. One of the things about the class is that students will contribute. We'll talk about levels, for instance, in the levels class. And I'll say, hey, does anyone out there see anything that has or looks like it's at an important level? All right. So one of the students said, hey, Mark, let's take a look at this Twilio. Symbol is TWL. I'm just going to make a little change here in my chart real quick to make it a little bit clearer. All right. So obviously I've heard of Twilio, but it's not a company I typically follow. So I never would have come up with this on my own. This particular student has given us some other really good ideas as well. This particular student, I think, has really, this particular student was never really been successful, I don't think, because they never really paid attention to levels, which seems like might not be that important of a thing, but it really is. So anyway, in the market, certain levels are more important than others. So this stock blew up on earnings. Okay. So one of the students brought this to the rest of the class's attention and said, hey, look, man, this thing looks like it may have dropped to an important support level, right? This 283 level, this black line is 283. Remember what we just said, markets have memories, right? Well, look, back in May, after this big sell-off that started in April, it went from $400 down to 283. It found support. All right, so now we fast forward from May up until the end of October. Company post earnings, which were not good, so it had this massive sell-off. Where did it find support? Did it find support at 285 or at 281 or at 273? No, it found support at a level that was important support before. Certain levels are more important than other levels in the stock market or in any financial market. As a matter of fact, if you don't end up taking the class, and if you never want to hear from me again or never look at Benzinga again, If you just take that away from this presentation, that certain levels are more important than others, that will put you so far ahead of where you are now. If you don't consider that, it's probably going to shock you. So anyway, so stock falls to an important level. We see that. All right, cool. That's one thing that has going for us after this big sell-off. All right, it stopped at this level. Maybe it's going to be a floor again. Another thing we noticed is that the momentum was oversold. We talked about before overbought and oversold. Things tend to stay within their typical trading range. Every stock has an average or typical trading range. If it gets to an extreme above or below that, it's considered overbought or oversold. In this case, it got oversold. Now, this thing on the bottom of my chart here is a simple momentum indicator. It's called RSI. It comes in Benzinga Pro, or pretty much any trading package or software has it. When the blue squiggly line here gets below this lower red line, it shows oversold conditions. So what happened here? The stock gets crushed, but it finds support at a previous support level. It's also oversold. See how this RSI is below the red line? This indicates oversold conditions. Why is that important? Well, oversold conditions will draw buyers into the market. They will be expecting a reversion, and those buyers could support the stock and even drive it higher. So now we have two things that put this on our radar screen. After a massive sell-off, it found support at a previous support level. After a massive sell-off, it was also oversold. The third thing is, see this big volume spike here? Okay. This stock averages on a typical day, maybe 1 million, 2 million shares of volume. On this particular day, it traded almost 22 million shares. That's enormous volume for Twilio. Generally, we don't really pay attention to volume. We trade liquid things, and in general, volume isn't going to really influence what the type of things that we're doing in the trading school. It's not going to have a significant impact or effect, with the exception of a couple of things. One of them is when we see these huge volumes, because what does this tell us when it comes at the end of a sell-off? This is what we call a capitulation in the trading world. What it means is that all the brokers or all the traders of the big institutional funds, the hedge funds, have said, we don't want this stock anymore. We're sick of it. And I can tell you firsthand how something like this happens, because I had this happen, more times than I care to remember when I was in the institutional trading world. Excuse me. So you might get an order up here. All right, let's sell 1 million shares of Twilio. Stock's at 360. So you're right. All right, cool. I got 1 million shares to go. I sold 100,000 at 360. Now I leave 900,000. You know what? I'm going to try to get 361 for my next 100,000. But it doesn't go up. It just goes down. Now it's down to 357. It's like, oh, damn. All right. I'm going to sell my next 200,000 here. All right. But now I'm going to wait for my third 100,000. I'm going to sell it when it gets back up to 360. But it doesn't. It gets down to 349. So finally, you say, you know what? The hell with this. You sold 300,000 shares. You still have 700,000 for sale. This thing craters. You just tell your broker, just go get rid of it, man. Just get rid of it. Just puke it out. I don't want to hear about it. I don't want to know about it. Make it go away. Don't even tell me what the price is. This happens, on Wall Street a lot. It is the capitulation. People throw in the towel. They're like, I'm throwing in the towel. I'm done. I'm sick of it. As a result, you get this huge amount of volume trades. That's what we see here. Now, why is that important? Well, it's important because of this. When buyers come back into the market after the support holds, buyers are going to come back in. There's going to be no sellers around. A buyer could come in and say, hey, man, all right, the sell-off's over. I'm willing to pay $290 for 1 million shares of this stock. The seller might be like, well, dude, I'll sell you stock, but I'm going to sell it to you at $295. I'm not going to sell it down there. There's no one else down there that's willing to sell it to you, so you're going to have to pay higher, right? So this lack of supply or this lack of sellers forces buyers to pay higher prices. That is the definition of what a rally is. There's not enough liquidity or volume at the current level for buyers to buy all the shares they want. So they have to pay higher prices to entice sellers to come into the market. That is the definition of what a stock rally is. All right, so great. Now we know why we bought this stock. We had this capitulation volume, it was oversold, and it found support. Now, we can't just buy a stock and say, okay, let's buy it, and then, go to the beach. We need to know, well, where are we going to sell it? And remember I showed before, we had a situation where a level that was, important levels switched from resistance to support. Well, now we have the opposite. We don't have seller's remorse. We have buyer's remorse. People bought the stock here, right? Around 312. A lot of people did. This was a support level. The stock rallied, goes higher. They thought they did a great job. But now after it falls back through their level, a lot of these buyers say, damn, I made a mistake. They're now remorseful buyers. They say to themselves, I don't want this stock, but I don't want to take a loss on it. So if it gets back to a level where I can sell it without taking a loss, I'm going to. As a result, these disgruntled buyers place their sell orders at the same level that they bought at. If there's enough of these sell orders, it's going to be a resistance level. And that's what happened here. So not every trade we do works out this perfectly, but this is really kind of just a textbook example at the things we're looking at. We're not doing anything, esoteric or magical or mystical, or, things like that. Some of the things you might have heard of, like Elliott wave or Gann theory. We're just, in this class, we focus on levels, we focus on trends, and we focus on momentum. And here's a perfect example of how just paying attention to those three important fundamentals can lead to profitable trades. So that was our Twilio trade. So we can go over a couple more.
Somebody from the chat, and it's funny, they're asking about XOP. I know you've been covering XOP for quite some time, and let's follow up on that. XOP, that one?
Yeah, well, our students made some money off of XOP, and as a matter of fact, I think it might be time to get back into this again. Look at where it closed. It's hard to see, but so anyway, let's go through this. This is a trade students made some quick money on. This came from watching oil. All right. Now, this oil, I'm not going to, this oil sell-off caught me off guard because it was down so much. But I suspect we're going to recover some of this. But here is how some of the students made a quick trade in XOP. And Rodrigo can even show you when he shows you the chat, like that, you might be out there thinking like, oh, gee, Mark, this is great in 2020 in hindsight, but we can show you how this is real-time stuff that we talked about. So anyway, oil was selling off. And what was it doing? Well, it looked like it was getting back to a level that had been resistance. Okay, 75.50. Remember, resistance can become support, just like we saw on Apple and like we saw on Amazon. Okay, so when we got to this support, we expected a little bit of a bounce. Now, most of the students are not futures traders, so they can't go take a position in the oil markets. But what they could do is buy an ETF that tracks oil. So we talked about buying XOP, okay, which is the oil and gas exploration ETF, which tracks oil pretty well, right when it got down to here, just under 100. So some of the students bought it. Okay, we got it, and this is a 3-day trade. So some people doubled their money on options, even tripled. Some people bought the stock at 99 and sold it at 102. All right. So we have another situation where we found something that got to an important level. The sell, I told people to sell, and I know some of our students didn't. So they're still holding on to XOP, but I don't think it's going to be as bad because I think it's going to come back. Was when oil got up to this little level here, 78.80. We had a feeling there would be resistance at this level. Why? It was a support level. And what was support can become resistance. We can see that on pretty much any chart. So when it ran into that, my advice to the students was, well, if you got into XOP, let's get out. Our target was like 104, which was right about here. Actually, it was a little bit higher. It was right where these former lows were. So our target was right about 104.50. So when it got there on Tuesday, most of the students sold. We had this big sell-off, and XOP got all the way down to 95.56. But by the end of the day, and then it ended up turning all the way around and coming back. Now, I would suspect that oil is going to see some kind of a rebound, even if it's temporary. Even if the, God forbid, worst case scenario, this COVID variant ends up being really bad, I still suspect that we're going to see some kind of a bounce. And this is something that the people out there could just have on their radar screen. This
For those that are asking where you can see these trades that Mark is talking about, Mark, do you mind if I just show them really quick your trading room?
Yeah, go ahead.
Okay, this is my favorite part of the day, and we have a nice poll out there. It's just for the people on Zoom. What are you doing Monday? All right, what are you doing Monday? You're buying the dip, you're waiting for a bottom, you're shorting, or you're holding. Make sure to answer, and we can get a good feel where you guys are at. So this is the trading school. Some of you guys were asking questions, and I just want to get this out of the way so we can focus on the education. Monday is going to be a big day. These are all the classes, all the lessons. You can see all the chapters, trends, Q&A sessions, levels, Q&A sessions. For every class has a Q&A. We have an open market discussion, and we cover everything in the market from introduction and philosophy to capital markets, all the way to investment psychology. That's one of my favorite classes. I love the brain. It's so interesting with trading.
Hey, Rodrigo, I don't see your screen.
Yeah. Oh, you don't see the screen?
Nah.
That's weird.
I think a couple of people mentioned that too.
Okay, hold up 1 second. Is it showing there? Can you see it now?
No, and some people are, some people are saying they don't see it.
Here's acting up a little bit. Well, you can hear me at least.
Yep, I can hear you.
Okay. Yeah, I don't know why that's not showing. Zoom is giving me like. Okay, Mark. Look, it looks like you and I have issues with Zoom today.
Okay.
All right. Let me try and share it now. All right. Is that working now?
Yeah. Okay. Cool. Now I see it.
Okay. It showed everything was fine to me. Sorry about that, guys. So this is where you get all the classes. This is the home, right? You just click here, home. It takes you to the spot where all the classes are. You have a nice schedule there, so you can plan ahead for your week. You have all the classes here, the chapters, chart patterns. The Q&A sessions are recorded. You see levels, trends, different chapters, everything from investment psychology all the way to introduction and philosophy. So these are all interesting topics that you're going to learn from Mark from the hedge fund manager perspective, okay? Not from the retail trader perspective. You're learning how professionals trade the markets. This is where you go for the live classes. Mark is going to be here. Well, he's there Monday to Friday, literally. And all the chat members have this chat where you can talk about the classes, the lessons that you're going over. If you have a question for Mark, this is the video library where you can find everything, pretty much every single class recorded. And this is the chat room. This is Mark's trading room. As you can see here, this is only he can post here. So there's no noise. Only you guys know basically, what Mark, his trade ideas are. You can see Microsoft is one of them. You also have access to all the bootcamp recordings. I'll go over that later. Those are very cool. And this is the XOP trade that Mark was talking about. And I'll just show you the date here. So you see this is not photoshopped or anything there. All right, last Tuesday. All right, even put in a sell alert. All right, short-term price target. Okay, you can see here, XOP. He posted it when it was down. You can see the date there, 11/19, XOP. You guys can see that better, right? XOP, $75. XOP sell alert. So this is where Mark's going to post all his trade ideas. And if you and this does come with Benzinga Pro, so you just click Pro there, and it takes you to the Pro site. It is the Black Friday special today, so just wanted to cover those questions really quick. Mark, let's go ahead and oh, before that, let's release the poll. Let's see what people think. All right, Mark.
Okay.
All right, guys. If you didn't vote, too bad. We got all the votes in. Do you see that?
Yeah.
And so this is what zingers are thinking about in the Zoom chat. This is where their mind is right now.
Okay. Buy the dip, wait for the bottom. I mean, not me. We're gonna be waiting just to see how, especially how Apple and Microsoft act around those levels that I pointed out. I think that's going to be probably the most important thing to watch tomorrow to get a sense of where the broader markets are going to go.
Okay. All right. Yeah. Let's go ahead, Mark. Let's continue here with the session here.
Okay. So I got to take the screen back from you now.
Yeah. Yeah.
Okay. Okay. So we're back to XOP now.
Yes.
Okay. Cool. So yeah. So this is the classes. Again, let me just reemphasize this. We go through our 8 things that I consider important. We talk about one of the classes is on levels. One of the classes is on momentum. One of the classes is on trends. One of the classes is on investment psychology. So we stick to these 8 classes, and then when the 8 classes are over, we just start them again. So it's not like you just take 8 classes and then we say, see you later, because the principles never change, right? In financial markets, levels are always going to be important, but what changes is the market. So instead of having a class where we show you in a book, all right, well, last, in August of 2017, here's what I said was going to happen, and here's what happened. So we look at these levels, and we're continuously looking in the market. So we saw that tomorrow. We're going to be watching Apple. We're going to be watching Microsoft. We're obviously going to be watching oil to see if we have some kind of a rebound. Let's see what else has been popular. A lot of the students ask about Tesla, and Tesla got an unusual signal that some of our students were able to profit on the short side of Tesla, and I will show you why. This I will pat myself on the back for, because I found this myself is not something one of the students came up with. But we talked about overbought and oversold, right? This indicator here at the bottom measures if the conditions are overbought or oversold. This is your RSI indicator. Like I said before, it's very common, and it's on pretty much any trading platform. So this is a reading here of 94, call it. This thing generally, the 50 is the middle. The range is considered 30 to 70, with 50 in the middle. So in general, if something's over 70, it's overbought. If it's something is below 30, it's oversold. So on November 1st, okay, Tesla got up to about 94.91. However, this is calculated. It's not important to know how it's calculated. It's simple math, but it shows it's extremely overbought. Now, I'm going to do something here. I'm going to scroll back throughout history, okay? Wish we had a time machine, then we'd all be rich. But we go back to when Tesla first went public, July in 2010. which I had no idea it had been around for that long. But look at this. Okay, this overbought reading here. Okay, it was the highest it had ever been in the history of Tesla stock, ever. The stock had never been as overbought as it was at this particular junction. Okay, so that was like right here. It had never had a move of this significance in terms of percent in its history. So it told us we were due for a sell-off, and sure enough, we got that news about Musk. Who the heck knows if he's selling, buying? I would take any billionaire that says something about that, in the market. I would take them with a grain of salt, because if there's a good chance they're selling, they're going to want to keep the market higher. They're not going to want to knock it down. But anyway, the point is the fact that we got this overbought here was a sign that something could happen in Tesla, and sure enough, it did. Now, what do? Well, we look at what are becoming the important levels now. Well, the top of the range is right around 1170. You can see that's been resistance. The bottom of the range is right around 1,000, which is important psychologically. Excuse me. So again, simple thing. Momentum told us that we were due for a sell-off. It had never been that overbought before. It just, it was almost like a buying frenzy. See, it's the opposite of like a panic selling. It's like a buying frenzy. It's the FOMO, right? It's the fear of missing out. So that's something we looked at. Just to throw a couple more names out there that are on our watch list. Let's see how Lyft is looking. All right, so now Lyft, we were watching, but we never got into it, and it's a good thing we didn't, because it had a big move lower on Friday. So Lyft was a stock that it had dropped to a level that was clearly support. This 45.25 level was support back in May, and then again in August, and in November, and then for 3 days before Friday. So last Monday, Tuesday, and Wednesday. So when we talk about trading, and our 8th class is trading models and strategies, and that's where we teach the students how to develop their own models and strategies that fit their own personalities. That's an important thing to understand. Okay, you need to develop a strategy that works for your personality. What works for me might not work for you. Going back to the football analogy, if you take Tom Brady and made him a linebacker, he probably wouldn't be that good. But as a quarterback, he's phenomenal. He's doing what fits his personality. Some people are like kind of, high energy, and they really like being in the markets, and they like, reading the news, and, well, those people have a good personality for day traders. If they have a job where they can watch the screen all day, or, if they're a professional or they're retired. Some people don't like looking at the markets all day. They don't want to be bothered with minutia. They just want to know what the broader things going on are. Those people, probably would not be good day traders. That's more people that would like buy and hold situations. So anyway, let's go back to our trading models. Trading models generally consist of 3 things: what we call a setup, what we call a trigger, and what we call an exit strategy. This setup is a certain thing, or a certain number of things, or parameters, or conditions that need to be met that tell you, hey, pay attention to this thing. There's a good chance it's about to move. All right. Let's see another important level up here around 55.70. Just another example of important level. All right. So anyway, so we get to a level that's support. We also get oversold. See this line, the RSI line is below the 30 level. I'm just going to change this back because this goes back to Tesla. So the defaults are this one, 30 and 70. So we can see that Lyft is oversold. So now what do we have? We have, hey, pay attention. Here is a chance where you might have a trade that's profitable. The falling to a support level and the being oversold are your get ready, get set. Those are your like wake up, pay attention. But they're not saying go. They're not saying go buy the stock. They're just saying pay attention. The trigger is what actually makes you get into the trade. Most of the time in our class, our trigger is the break of a downtrend line. So let's just draw our downtrend line there. Other students have different triggers that work better for them. My history or my experience is I like using trend lines, but there are other ways to do it. A trigger might be, something that happens here with the RSI, like maybe it reverts a certain amount. But anyway, we have not gotten into this trade yet because we never got our trigger. The stock has not crossed this downtrend line. A lot of people, and I can almost guarantee that some of the people listening right now would agree with this. They guess, and this is what's called catching the falling knife. You just guess. You think, well, it's down. It's probably not going to go down anymore. That's almost a guaranteed way to get run over. So what we do to not, guarantee it, because there's no such thing as a guarantee, but to put the odds more in our favor, we say, well, we'll buy it, but not until this downtrend line breaks. So we got our setup, we got our ready, we got set, but it never crossed the downtrend line yet. So we never got our go. So we never got into this trade yet. Or it doesn't mean we're not going to. Who knows? Maybe tomorrow it skyrockets and gets back up here and we buy it. But the point is if by having a trigger, a defined parameter or condition that needs to be met for you to get into the trade, that will prevent a lot of your losses. It'll prevent you from guessing. Ultimately, what we want to do with the trading model is take your emotions and your guessing out of the process. Because if you're just guessing, or if you're letting your emotions control your decision making, you're going to lose. The market is not your friend. It will take your money from you if you're just guessing. And why do most traders fail? Well, they guess. They get an idea from a chat room, or they see some guru on television or in a financial media or something. But guessing is pretty much a guaranteed path to failure. So having a model is not a guarantee of success, but it definitely will stack the odds greater in your favor. Perfect example here. A lot of people probably said, oh, gee, Lyft dropped to this 44.25 level. There was support 4 times in the past. Maybe it will be again. Well, they got run over. Now they bought it at 44.45. The stock is a couple bucks lower. So this is why we like to have a trigger. We have our parameters, which are our setups. That's your get ready signal. Your trigger is your go. And then your exit strategy would be to know where your target is, where you're going to sell it if it gets to a certain level. In this case, you can say, well, if it gets back up to 56, I'm going to sell it because that's where resistance was. So that's Lyft. I think we were also watching Best Buy. Yeah. Best Buy is an example of where nimbleness helps some traders make some money, especially like the day traders, right? So we saw Best Buy reported, and it just got crushed. Fell all the way below this important level here around 121. Okay, it was around 140. It reported its earnings. It fell all the way down to like 115. So we said, all right, well, if Best Buy gets back above this important level, there's a chance it keeps going higher, right? So we want to wait. Maybe if it gets above 121 to 122, 123, when we know this potential resistance is broken, this resistance has kept a top on it all throughout here, then there's a chance it goes higher and we'll get in. But if it can't get through this resistance, there's a good chance it rolls over and goes lower, and then you take the short side. So when it got to this level and failed, meaning it didn't go through it, well, the tide turned and the bears took over and they drove it down a few bucks. And I know a couple of the students were watching this for a breakout, but when it didn't break out, it broke down and they went in on the short side or bought puts. And as of now, they're making money on it. So again, it's nothing, we're not reading tea leaves here. We're looking at the charts to get an idea of what the supply and the demand dynamics are in the market. And when something is out of equilibrium, that's our chance to make money. If something's in equilibrium, it's not going to move. We want things that are overbought or oversold, that have reached important support or important resistance. And that's where our opportunities come from. We don't tell the market what to do. We let the market tell us what to do. So hopefully that makes sense to people.
Yeah, and that's really interesting because it is an approach that makes sense, right? You're following common sense and experience ultimately, right? Because I talk to lawyers, doctors, people who come from high level positions, and the market wipes them out. It's like that intelligence in the outside world doesn't always apply to stocks, right?
Yeah, and I tell people that you see these trading courses, and I guess maybe a lot of it's marketing, but you see like someone will be like, I'll teach you how to be like a market guru, or I'll teach you how to be a champion trader. We don't do that in our school. We are humble students of the market. We're trying to learn about the market and let the market tell us when to make profits, or when we have a chance to make profits. This isn't like this isn't like, hey, I can teach you how to turn $1,000 into $1 million in a month. And if you can find someone that can do that, please send me their information, because I will sign up for that class. Right? It doesn't happen. A lot of it is stuff that's downright, like I said before, some of it's misleading, some of it's naive, some of it is downright fraudulent. I saw a particular newsletter where the person that wrote this newsletter was touting that, my last recommendation, I doubled your money in 1 week. All right, that sounds pretty cool. This person can double my money in 1 week. Sounds great. Well, how could I lose? So I started looking at this particular newsletter stocks, and for every stock, there's a bid and an offer. Okay. The bid is the highest price anyone is willing to pay you right now for your stock. If you went into the market and you sold 100 shares, you would get a bid price. You would get the highest bid in the market. That's the highest anyone is currently willing to pay you. If you went into the market as a buyer to buy 100 shares, you would pay the offer price. That's the lowest price anyone is willing to sell you at the time. Every stock has a bid and an offer. Okay. This particular newsletter had this recommendation of this penny stock. The penny stock, the bid was 1 cent. The offer was 2 cents. So if I went in there at, now at 2:00 and I sold 100 shares, I would get 1 cent. The last trade on the tape, that's trader talk on the tape, or that you would see, is 1 cent. Now, suppose I wait 5 minutes and I go buy another 100, and now I go to buy 100 shares. Now I'm going to buy at 2 cents. All right. Now the last trade is 2 cents. So what happened? We had a 1 cent trade. We had a 2 cent trade. The price has doubled, but the bid and the offer have not moved. The stock has stayed at the same price. All right. So buying at 1 cent and selling at 2 cents is a lot different than buying at, say, $10 or selling at $20. I mean, could you argue technically this person, doubled your money? Well, I don't even think you can argue it technically. But it's just very misleading. I mean, you can go in there and sell 100 shares and then buy 100 shares and say, hey, man, I doubled, the stock I recommended doubled in price, but in reality, it hasn't really moved. So I can tell you this, like on the big hedge fund trading desks and the institutional desks where we're managing a lot of money, no one is really interested in these mythical or esoteric techniques. What we're looking at is what levels are important. What's the momentum? What's the trend? We're not watching what they're talking about on CNBC or some, secret trading method that someone found on a vision quest. When they took peyote in the desert or something like that. It's just common sense, right? Where are the levels? Where are the trends? I mean, that's what I want to know. When I look at a stock or someone said to me, hey, take a look at the stock, what am I looking for? I'm looking for what are the levels? What are the trends? Let's just take a random stock. I don't know. II. Is II a stock? IIV. All right, let's see whatever this thing is. Okay, never heard of this stock before. But if someone showed this to me, I would say, all right, well, what are the important levels and what are the important trends? Now, remember, I've never looked at the stock before. I don't even know how to say it. It's like IIV1 or 26, if that's Roman numerals. But what do I see? Well, I see an important level. I mean, look at this, $60. $60 was a support level back in May, right? And it became a support level again, August through the end of September. Then it became a resistance level for a short period of time. Now we're getting, falling back down. Now, my guess, I don't know anything about this stock. If it gets down to 60, there's a chance it could bounce a little bit. I don't know anything about it, but what I do know is I've picked out a level that is important for this stock. And you don't need to be a guru to see it, right? It was support here. It was support here. So it was support through most of May. And then from August 19th all the way to the beginning of October, it was clear support. Let's just pick another one. I don't know, EE, Eternal Energy. Well, EEM. That's the emerging markets ETF. All right. So obviously I'd have looked at this before. We could see here. I mean, this isn't a great example because this level broke up, but at the time, 52 was clear support. We can look down here now. Well, that was support down around 49. All right. So just, I mean, any, I don't want to just keep coming up with random examples here. Let's look for something that's 88 Energy. I don't know. That's probably a little penny stock. I mean, well, penny stocks aren't as good, but you can see this 2 cents is what is the sundial? Yeah, we were looking at this one the other day. All right, this I put on the Benzinga Newswire, but let's go back to important levels, right? 90 cents was support for this stock. Then it turned into resistance. Why? Remember, buyer's remorse. People bought it, sold it, went down. They say, I made a mistake. I want to get out. So they place their sell orders at 90 cents. If there's enough, it converts what was support to resistance. Now, there was some news back here. I don't recall what the news was, but it was on November 12th. Was it earnings? Yeah, okay, it was earnings. And, this was on the Benzinga Newswire. I do stuff for the Newswire too sometimes. I don't just do the trading school, but, I said, hey, if it doesn't hold this level, there's a chance it's going to have a big sell-off. And sure enough, what happened? It couldn't hold the level and it sold off. Where did it find the bottom? Pretty much right around 65 cents, which was where the low was, going all the way back to there. Take a look at this stock. This is something else that some of our students have been stopped out on with a profit. So this is Stanley Works, right? Or the old Black and Decker, Stanley Black and Decker, they call it. Look at this $175 level, right? You don't need to be a market guru. After this huge run up, like from 15 to early January of 2018, right around 175, what happens? Well, it hits resistance, sells off, goes down here in 2019, rallies back. January of 20, where does it hit resistance? Pretty much right at 175. The same level it was at 2 years later. What happens here in January, well, December of 20 through February, level becomes support. What happens here? Sold off, became support again. Rallied, dropped back to 175. This is where a bunch of the students bought it right here. And I think some of them, the target for the sell was around 190. Why? Because 190 was an important level. It was support here, and then it became a resistance, and then it became resistance here. So after this sell-off, all right, we bought it at 175, got back up to 190. That was a logical time to sell it. So, Rodrigo, it's like people, a lot of beginners think that there's these secrets, and all these great money managers like a Gabelli or a Steve Cohen have these secret methods. But I can tell you, as someone who has traded with these guys, firsthand, it's not true. That's just a big myth. It is not true. They don't.
Yeah, a lot
have
of people
secret
think
systems.
you're right. I mean, and that's something that everybody, when you start, you're like, naturally every human tries to game the system, right? You try to win and beat the system, and you try to find shortcuts, right? Naturally humans try to do that. In trading, trying to find shortcuts, what you're going to find is some people that are going to tell you a lot of BS that's not true. And, they're not going to tell you the truth, which is that you have to trade with a strategy and a plan. There's no such thing as a holy grail. And looking for that just hurts you overall, because there is a process. You have to learn all of the different concepts in the market, everything from levels to trends to momentum, even all the market participants. And it's just not an easy 1-2 thing. And I know that the year, 2020 was a crazy market, right? Everything was going up. Everybody thought they were Warren Buffett. But, once we step into reality, things change. And a lot of those traders have been totally wiped out because there's no set strategy, right? Hope is not working anymore.
Hope is not a strategy.
Yeah.
Hope is not a strategy. That's an important thing to remember. And, you see, and in the class too, we're not just talking about, trading. That's the essence and the main focus, but we talk about anything that's pretty much related to the market. Sometimes we talk about fundamentals on companies if there's an important earnings release out. Like, for example, like when FedEx reported their earnings, we went over the release, not because we were really interested in anything to do with FedEx, but we were just trying to get an idea on what FedEx said about like supply chain issues and so forth, because who knows better about what's going on in the economy than a company like FedEx. They're right at the heart of it. The better they do, this reflection of the economy. So we talk about fundamentals sometimes. We talk about macroeconomic things, we've been spending a lot of time talking about inflation. Obviously, that's been a hot topic. Market myths. For instance, so I was watching a show where they had, and I don't want to insult retail traders, because we're here to teach people, not to insult people. But I saw on television some retail trader who is touted as being this great trader, talking about market makers and how market makers take retail orders and how they rip off retail people. And I don't know if people think that, but I will tell you this: I was a market maker for 2 years, and that's just not how it works. It's not how it works. Market makers are not there trying to rip off retail traders. If you're a market maker at Goldman Sachs, you have more important things to do than go out there and try to rip some day trader off, right? The vast majority of being a market maker is you are working orders for your institutional clients. If you're at Goldman Sachs and you're making market in banks, you're the person there who has the expert in the banks. You know what's going on with the banks. The reason why most of the time, the vast majority of the time, a market maker isn't going out there and playing in the market is because of something like this. For example, let's go to one of our meme stocks. Say you're a market maker and you think that you make a market in GameStop and you think GameStop is going to go higher. So you say, okay, cool. I'm going to go buy GameStop. All these retail traders are selling. They don't know what they're doing. I'm going to go buy GameStop because I think it's going to go up $2 and then I'm going to sell it. All right, say you buy your GameStop and it turns out you're right. Now it goes up and it's up $1.50. Now say all of a sudden a big institutional client calls up and says, hey, Goldman Sachs, I got 3 million shares of GameStop for sale. Well, guess what happens to that order? It goes to the market maker. So now the market maker has all this stock that they bought that they're sitting on a profit, but now they have a big sell order from one of their clients. They have to tell the client, hey man, I'm long a lot of this stuff. Can I go along with you on your sell? Meaning, can we split prints? Like if we sell 1,000 shares, I'll take 500, you take 500. The vast majority of the time, the client is going to say, no, I don't care what you're doing, sell my stock. So then the market maker sells the stock, and by having a big sell order, they force it down, and then they end up taking a big loss on the position that they bought for their prop account or the proprietary account. So 99% of what market makers do is working orders for institutional clients, okay? Hedge funds, institutional managers. Now, besides being a market maker, I was also a hedge fund trader, which is the other side of the business. Who are hedge fund clients? Are they rich oligarchs? Well, I guess in some cases, like people like Zuckerberg or whatever are oligarchs, but the vast majority of institutions or business are like this. Okay, the last hedge fund I was the head trader at, our biggest account was a hedge fund. The two biggest clients were a teacher's pension plan and a religious endowment. All right, so as a hedge fund trader, I have to realize, this money I'm trading is not my own. This is my client's money. This money is my client's. My client is this particular pension plan. The people in the pension plan are teachers, regular blue collar people. That's who I'm representing when I'm placing this order. I am aware of that. I have an ethical and a moral obligation to make sure I do the best job that I can because they're trusting me. The pension plan is trusting us to manage their money. When you go into the market maker says, okay, well, I am working an order for my client, which happens to be this big hedge fund. All right. So it's this whole chain. Well, the market maker is working an order for a hedge fund. The hedge fund's clients are pension plans. The pension plans are made up of the little guy, so you could be a union, you could be a union person or, and you could have money in a pension that's being run by some hedge fund manager somewhere and you don't even know it. So that's a little bit of a digression, but I'm just saying, like, we talk a lot, we expose a lot of the misnomers and myths about what really happens on Wall Street. And, I find it kind of frankly amusing how, a lot of people think all these hedge fund guys are all like in collusion with each other. The reality is these people that are running these funds, they got big egos, man. They're competing against each other. They're not colluding with each other. Tom Brady doesn't go out there and say, hey, Aaron Rodgers, let's figure out a way that we could, somehow get to the Super Bowl together. Like, Tom Brady wants to kick Aaron Rodgers' ass, and Aaron Rodgers wants to kick Tom Brady's ass. They're competitors. They have big egos. So again, a little digression, but we talk a lot about what really goes on Wall Street, and not just like the myths and misnomers I hear about on the news.
Yeah, I mean, besides that, obviously, what I do enjoy is your input in trading because, obviously, retail traders, they're all over the place, right? This guy saw this one video there, this other guy heard that on a chat room, blah blah blah. But professional trading as, people, hedge fund traders, hedge fund managers, when you're at that level, right, that's when you learn how to do, how to properly, right, trade responsibly, because you're not just YOLOing your money. You're working with other people's pensions and, savings and such, right?
Yeah, it's a whole big food chain. And that's what people have to remember. These hedge funds are not, managing money for these faceless oligarchs. The biggest Wall Street clients are the big pension plans. I mean, I don't know, I don't know exactly, but I think at one time, like the biggest pension plan there was I think the California State Teachers, or maybe California State CalPERS, California State CalPER stands for something like public something pension or whatever. So anyway, whatever this CalPERS pension plan has, how many tens of billions of dollars that they manage for all these California state employees. Well, they need someone to manage that money. And what do? Who is going to manage our $100 billion? Well, who's ever the head of the California state pensions, some, I don't know if they're elected or appointed or whatever, they have to go out and find money managers. And what do? They go out and they look for institutional managers or hedge fund managers, people that have good track records. So it's just a misnomer that Wall Street is all about the little guy trying to rip off, I'm sorry, the big guy trying to rip off the little guy. So again, I don't want to get too away from the talking about the class, but we cover a whole lot of subjects. Pretty much anything that pertains to trading, anything that pertains to investing, or anything that pertains to Wall Street, it's all kind of fair game, depending on what's going on that day. We talk about a lot of different things. We talk a lot about investment psychology. And I know Rodrigo likes to talk about this a lot. And investment psychology is really important. It could even be the most important thing in trading and in being successful. What is bad psychology? Well, bad psychology is guessing. And bad psychology is, you bought a stock and now it goes down and you hold on to it because you hope it comes back. Well, what do we just talk about? Hope is not a strategy. You don't hope it's going to come back. Maybe you have a valid reason for thinking it's going to come back. It's oversold, it's reached support. But psychology is psychology is what wipes people out. And people have all these perception biases and these psychological things that make us, as humans, we are not wired well to be good investment managers. Why? Because when we deal with money, it causes us to be afraid, right? It causes fear. You buy a stock and it goes down. You're afraid you're going to lose money. What do? You hold on to it. What happens? It goes lower. Now you're even more afraid. What do? You hold on to it. It keeps going lower. Let's look at the opposite side. You buy a stock and it goes up. Now what happens? You're afraid. You're afraid you're going to lose your profit. You're afraid it's going to roll over. You're afraid, you're not going to think you're smart if it goes down. So what do? You sell it, make a little bit of profit, but then it keeps going higher. So what does fear do? It makes you hold on to your losers for too long. It makes you get rid of your winners too fast. Fear is probably a good thing psychologically. 20,000 years ago, if you were out hunting for a woolly mammoth, you'd want to have some fear. It makes you stronger. It gives you adrenaline. It gives you laser focus. But those emotional responses are what cause people to lose money in the stock market. That's why we have what I mentioned before, are trading models. They're not perfect, but they're ways to take the guessing and the emotions out of the process. Now you might be thinking, well, gee, I'm not susceptible to these human emotions or perception biases. Well, just think about this. How many times have you been driving down the highway and you come to a toll booth and there's like 15 different booths, but all the cars are like going to the same one? So all these people get in line thinking, oh, well, this is the only booth that we can go in. But then someone who can break away from that herd mentality, because it's that herd that's sucking you in, like you got to get on this line. You don't even realize it, but that's your innate emotions like making you think like you need to be on that line. Well, if someone can break away from that, they can look around the traffic and be like, oh, look at that toll booth way up there. It's got a green light on and there's no one waiting. And you can drive up and rip right through that toll booth. And then a lot of the cars behind you are going to follow you. But right there, every day, on any highway, at any toll booth, you can see examples of human behavior or humans' emotional responses making them do illogical things. It's the same thing that happens in the stock market. You let your emotions make you do illogical things. So it's like I said, we talk about fundamentals, we talk about traffic patterns, we talk about a lot of things in the class, Rodrigo.
And a reason why I'm just a big fan of the psychology part is because as retail traders, right, we like to think that we know our stuff, right? Because who's going to tell us we don't, right? We're trading by ourselves in a little trading room, but ultimately, like if you don't have professional training, and I don't blame retail trader for not having this because obviously brokerages and the big players, right, have made the education for trading very hard, if not impossible to reach for retail traders. Until recently, companies like Benzinga came out and started democratizing the whole stock market as far as like data, right? So if you don't have, I'd say, extensive uh, training in trading, you're going to rely and fall back to your emotions because that's the only thing you have there, right? You don't have 20, 30 years on your belt trading, managing funds. So the investment psychology class to me is great value because that's something you don't really hear about much in the markets. And as retail traders, it's psychology is the biggest killer because you don't have any trading background to back up many of those trading decisions. And ultimately, like you said, you end up selling too early and you buying too high. And the emotions play an even bigger role when you're trading like that.
Yeah, it's yeah, I mean, people are not wired to manage money or to trade. And what's kind of an amazing thing is that say someone wants to buy, I don't know, a new washing machine. Okay. They might spend a week or two researching washing machines. Well, where can I get the best price? Should I go to Home Depot? Should I go to Walmart? Which one has the best warranty? They might spend a week or two researching a washing machine that costs 500 or 600 bucks. But yet, when it comes to money, and someone in some chat room somewhere says, "Oh, you should buy this," they'll throw a couple $1,000s at it without even thinking twice. It's like when it comes to money, people lose rationality. Like why would you spend 2 weeks or 3 weeks trying to save $50 on a washing machine, but yet you'll throw 2 grand in the air just because some person in some chat room somewhere said it's the right thing to do. I don't know. I mean, I'm not a psychologist, but I'm from a trader. I know that when it comes to money, people think illogically, and that's one of the reasons why people lose money. And to the people that are listening right now, I commend them because they're actually taking time on a Sunday to learn a little bit and to try to make themselves better. And the first I guess the first step in the path to success is realizing you need, to learn and to learn from someone who's been there before and who has made some of the mistakes that you've made, and who's learned how to correct them. So yeah, man. So I think it's cool that people are interested in coming to a class. And again, I want to emphasize that, like, this is a class for people to learn. The only prerequisite is that you want to learn. I don't care if you have never traded before and you don't know what a stock is, or I don't care if you're someone who's been trading for a long time, has had a lot of money, and is in a really is having a bad streak. Is the only prerequisite for the class is you have to want to learn. Don't just think it's like you're going to get the trade of the day and then it's like, sayonara, we'll see you tomorrow. So I think that's a big part of it. And we're having a lot of students getting to know each other in the chat rooms. Some students are starting to work on like putting together models as teams. So, it's so far I'm very happy. I want to run this as a school, not as a business. This is a school. This is where people come to learn, right? This is like when I have 2 young kids, and when I wanted them, like a lot of parents, I wanted them to take karate. And I went to, all maybe 10 different dojos around where I live here. And most dojos are businesses. They're there because, they want to make money. All right, well, you stick around long enough, you'll get a black belt. You want to test for this belt, you got to buy a new gi, blah, 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 blah. This is, I don't run this as a business. I run this as a school. And that's what we want. We want students that want to learn. And part of it is that some of these other places, it's like, well, learn how to trade like me, or I'll teach you my method. Well, maybe you can learn someone's method, but that doesn't mean you can use it, because it might not fit your personality. So, this is a school. We're not running it as a business, right, Rodrigo? We want
Yeah,
our students to be active and to learn.
and you mentioned that people prerequisite there for people to want to learn, right? And I like to add that sometimes you got to unlearn some stuff, because there's a lot of YouTubers and these social media kids on TikTok, just doing what kids do, right? So it's very easy to fall into that trap, because it's easy, and it just gamifies the whole thing, when in reality people are doing this to create real income. They're doing this for a full-time living, or to get out of their 9 to 5. And we obviously do our best to help them with that, especially yourself, Mark, doing these classes Monday to Friday. When I started, there's nothing like this out there, man. And it was just you, yourself, and all these other pump and dump chat rooms that are out there. And you don't realize what is a pump and dump chat room until somebody kind of opens your eyes to it. And I've seen a lot of students open their eyes to what trading is and how to approach it, because of the system, right? Everything that you teach them there, which is pretty good.
Yeah, it's logic. And as someone who's been a professional trader, I don't know, 20, 25 years, when I was starting this school, I tried to look at some of the other schools just for insights or whatever, to see what our quote unquote competition is. And some of the stuff I look at, it's like, dude, like, what the hell are you talking about? Like, I don't even I don't even understand what you're talking about. And I've been doing this for years. It's like, well, we got to have this moving average do this, and this elite wave do that, and this Fibonacci do this. And it's like, I guess it's what it's like they say, like when you read a label on food, like if you can't pronounce one of the words, you shouldn't eat it. And it's like the same thing with trading. It's like, if there's some like esoteric technique that's so esoteric, like you can't even explain it or know what it is, you probably shouldn't use it. We want to remember the markets are driven by supply and demand. Every time you look at a chart, you need to tell yourself or ask yourself, what does this show in terms of supply and demand? If something is in a downtrend, well, right now, it means the sellers are in charge, important level. That's where buyers and sellers get really active. I think any liquid market, like if you looked at a price chart, you would see the same things, whether it could be real estate, milk, the price of any, you could see it in commodities, weed and sugar and lumber. But any place where there's a free market, a liquid market, these same things apply. Like people say to me, gee, Mark, what you do sounds really complicated. You know what? It may be because a lot of people on Wall Street want to make it sound complicated so they can charge higher fees. But if you can understand this, you can understand what we do. Say you own a house and you're thinking about selling it. If it's a seller's market, what does that mean? You're a seller. Well, the ball's kind of in your court. You can wait for the buyers come to you. You can name your price. That's a seller's market. What if it's a buyer's market and you want to sell your house? Well, no one's going to be knocking on your door. You're going to have to go out and find buyers. You're going to have to knock on the doors of the people that want to buy, and you're going to have to accept their price. So if you can understand the concept of supply and demand and how it moves the housing market, you can understand what we do here, because it's the exact same thing. If there's more demands than there is supply, the price goes higher. If there's more supply than demand, the price goes lower. By looking at these charts, we can get, early insight into that, and then that's where we can take our positions to profit from.
Mark, and it all comes down to education, because I don't know really where this whole thing started, where, people are comfortable coming into the market with, one, two, three, $400,000, no guidance, no education, putting the entire life savings, mortgage in the house, buying stocks, without any experience or guidance. And I don't know really who's to blame for that, but like if you think about it in the real world, right, outside of stocks, if you want to be a neurosurgeon or a cardiologist, you don't just walk into a surgeon room, ER room, and start operating on people with no prior, training and education. So I think it's important to always keep that in mind, that we're doing, like, trading stocks it's not guaranteed, right? You need to have a strategy, you need to have a plan. So I just want everybody to kind of like remember that we need education and we need to know what we're doing if you want to be successful in trading, because the only one that benefits from you not knowing what you're doing is the other person on the other side of the trade, the big brokerages. When you're buying calls out of the money, might as well send a check to Goldman Sachs, because when you're trading, there's another side of the coin. Someone else is selling you those shares. So be mindful, try to be the most educated trader, try to be the trader that has the upper hand, and part of that is the education that Mark is giving you guys. So I'm just really happy we're doing this. It's very cool.
Yeah, and all that being said too, it's it's not really complicated. We're just going to focus on the things I talked about. Which levels are important, what's the momentum, what's the trends. It's not we're not here, we're not churn viruses or calculating the weight of a star in a black hole or this really complicated stuff. It's just like, hey dude, here's where the buyers live. That's like trading talk, right? When you're a hedge fund trader, call the guy, hey man, I got XYZ for sale, where do the buyers live? That just means like, what level can I sell my stock? That's a fancy way of saying, where is there a demand level, where is there a support level? You're not calling up and saying, hey, like what happens if the WTO says that, or if the operational margins are falling, or someone on CNBC just said this. It's like, dude, where can I sell this stock? Like, that's what I want to know. Where can I sell it? I don't need anything else. What are the important levels? That's what traders are looking for. And I think that the students can, like I humbly, I know a lot of the students like, are learning, and I take that very humbly. And I also understand, they're putting their, they're putting their trust and their guidance in me, and I appreciate that. But it's like, we're just focusing on common sense and logic, and there's no, if it sounds too good to be true kind of a thing, it is. This is over, like, here are some principles of markets, right? Stocks that are oversold, we talked about, oversold is something that's below its typical or normal trading range. Okay, so we know what oversold is. We know what a support level is now. Levels where there's a lot of buyers, where there's enough buyers to absorb all of the supply or all of the sellers. Okay, oversold stocks that get to support levels tend to rebound. That's a very simple concept. Oversold stocks that get to support levels tend to rebound. Very, very simple concept, but very effective, very logical, and a relatively easy way to make money. We find stocks that are oversold. Like, let's go back to our Twilio example, right? An oversold stock, right, got to support and it rebounded. That's one of the principles we talk about. No, it's not tea leaves, it's not astrology. Just oversold stocks that get to support tend to rebound. That right in there, in and of itself, could be a strategy. And a lot of our trades are based on that.
Yeah,
Then we
and
have,
that's yeah, that's another. That's actually in the chat room as well. That trade, the Twilio trade.
oh yeah, I'm just bringing this up because I don't know. It's there's so many of them. They tend to kind of just blend together in my in my mind. But oversold stocks that get the support and to rally. Let's look at the opposite. So say you bought a stock and you want to know where you sell it. Well, overbought stocks that get to resistance tend to sell off. It's the exact opposite. So we see here, Twilio is overbought up here and over here. It sold off, right? So those are two important principles. Oversold stocks that get to support tend to rally. Overbought stocks that get to resistance tend to sell off. Very simple, but really very effective, almost amazingly effective uh, in accuracy and the ability to generate profits.
The coolest part of this to me is when, because obviously, we have chapters and we have to give the students a format, right? When it comes to the education, give them the blocks. But ultimately, the coolest part to me is like when you can apply them all, right? When everything's on point, when your psychology and your mental state, you understand what you're going to do, you have a strategy, you have a plan, well thought out, and you kind of use all the chapters to make that trading decision. And many of your trade ideas pretty much have this all built in, but it's really like that's really what you can see the students like Cypher or any of those other guys that you've seen that have been pretty successful at paying attention on the lessons, paying attention on your education, and using that to profitably make trades. So seeing that happen in real time is always good.
Yeah, it all kinds of blends together. Um, it all kinds of blends together. We have a levels class, we have a momentum class, but if we're talking about something that's at a level and there's momentum in play, it's something we talk about. So that's why just 8 classes isn't enough. You're not going to learn how to be a great trader if you just take lessons for 2 weeks. This is something that you sign up for. Think about it this way, right? Let's go back to SPY. Okay. So the classes started at the end of September, and here we are, at the end of November. Let's see. All right. So we've had 2 months, right? So in 2 months, what have we seen? What have we been through, or what have I been through with the students? So we started our classes here. Okay. So again, we're at the S&P. We're looking at SPY here. All right. So classes started right around here at the end of September. So one of the very first things that we saw was this 425 level on SPY. All right. When we first started talking about classes and we started talking about levels, I think classes started right here. Okay. So market send this move word down, and it's like, all right, well, a lot of the students are like, well, where's the sell-off going to end? Very common question for someone who's new to the markets. We talked about, well, there's a good chance there's going to be support around 425. It was resistance in June, it was support in July, and look what happened. What was the low trade in early October, late September? 426. Right. So we were within a point. There's no exact numbers here. So since the classes have started, we've lived through this, downtrend here, sell off, but we found the bottom. How did we know to find the bottom? Well, back then, it was the healthcare gave us the signal. Okay. The healthcare sector was trending lower. And when healthcare broke this downtrend in early October, like 2 weeks after the classes started, that's what told us that S&P was going to hold and rally. So now SPY has been going higher. So we follow this through, and it's like this ongoing class or whatever, like it's continuous. So we follow the market down. We got a good accurate call on where the bottom is going to be. Then we follow this up, and we just saw this uptrend break, like I talked about. We've been going sideways, had this other short-term uptrend break. Now we're in a downtrend, and now we're looking at the next level where 453 could be support. So it's a class, but it's also like following the market at the same time. It's not just, oh, here's a lesson, go out and figure it out on your own.
Yeah.
We're and guess what? If SPY gets down to here, like 454, and remember how we started, if Apple can hold this level, and if Microsoft can hold this level, my guess is that we're going to get a rebound that is a very tradable rebound. I mean, if you're an option buyer, you can buy some calls, or an ETF, or you can even buy SPY.
Mhm.
I mean, I could be wrong. Maybe it breaks and keeps going down, but we follow along with the markets. So it's not just like a trading class. It's also like it's like an ongoing market digest. I don't even know what the right
Yeah,
word
it's
is.
rolling. It's rolling. It doesn't stop because I know that there's a lot of things out there that they're gonna give you these 20-year-old pre-recorded videos, like before computers were there, or like 5 years ago when the market was a totally different animal. Like the stock market's an animal and it changes, I'd say on a daily basis, but you'd see the changes and different levels matter at different times. And being able to have that live class with the engagement of students being able to participate in the class, ask their questions, not be ignored or anything like that. They all have a question about the lesson that you're teaching, so that's taking it to a different level, because a lot of people paid hundreds of thousands of dollars for an education in a university and they ended up or without a job or working in something totally different. And this is actually something you can use today to start changing your trading, to have a plan and trade with the strategy. So the live classes, I mean, to me, that's probably the best part, but
Yeah,
they're recorded too.
and a whole part of this comes from my experience or vision for the class was like, well, the average investor who is interested in the market but doesn't really know what's going on because they listen to all the myths, they don't really know what to believe. I wanted to have this class of like based on what a hedge funds trader's day is like. And the first thing that you talk about when you go in the morning is, what are you going to be looking at that day? And the answer is, what levels are important? What's going on? What's overbought? What's oversold? It's 7 a.m. when you go in and you start thinking about things, like that's what you're looking at. And obviously what was in play, on September 1st is going to be very different than what's in play on November 1st or December 1st or January 1st. So it's like, it's a matter of here's, forget what they're saying on CNBC, like here's what you should really be watching. Like, let's go back to oil, right? Because, a lot of the students were like, right. So let's go back to, now it's even more profound actually with this big move lower. But let's see, was it here? Sorry, man. It's when the leaves change, I get like allergies. Sorry to be coughing, but anyway, so you might remember like last week they talked about they were releasing oil from the Strategic Petroleum Reserve. So a lot of the students were like, well, that's what's driving oil down. That's what's driving oil down. That's what's driving oil down. Well, that's what they said on CNBC. That's what they said on, this channel. That's what they said on that channel. They released oil, right? It's going to drive prices down. Now, if you were to look at this chart, I guess we could kind of forget this day. But even if we didn't forget this day, and I said to you, everyone on the media says that if they release oil out of the Strategic Petroleum Reserve, it's going to drive oil down. Okay. If you were looking at the CNBC crew or whatever, it's like, they released oil from the reserve. This is going to put pressure on prices. Which one of these days in this chart here would you say was the day they released the oil? Well, the media is telling you they released oil that's going to drive prices down. Maybe it was this day. That's a down day. Maybe it was this day. That's a down day. Maybe it was this day. That's a down day. Guess what? No, they're all wrong. You know what day the Strategic Petroleum Reserve was tapped? Okay, was this day, this up day. Okay. Oil went up that day. All right. Now, my point is that when you listen, you can't really listen to the media when they talk about what is driving the market. The vast majority of the time, they're wrong. All right. Am I criticizing them? Well, yeah. But do I understand where they're coming from? Well, they're the media. They got to entertain you. They got to try to put a reason with everything. But, students were telling me on this day, well, they released all this oil. It's going to put pressure on the market. Well, it certainly didn't. So that's just another little aside there.
Yeah.
Talking about what really goes on in the markets and what really drives them. Because 90% of the time when they're on TV talking about like, the market's down because of this, well, they're wrong.
Seth is asking a real question. I just want to get to his question really quick. He's asking, how can people who hold a job get the best of these classes? The classes are uploaded to the library. We have a student lesson library where everything that Mark teaches. That I went over that earlier, but we'll go over that after we're done here with the session with Mark.
Yeah, it's not you don't need to be connected intimately with the markets to benefit from what we talk about. You don't even need to look at the markets every day. But if you go through the lessons, eventually you'll develop a style that fits your personality and your, what you got going on. You don't need to have. We have students that have systems that they trade once a month or once 2 months, or it's not everyone is a day trader or a fast trader. But if you take the classes, you're going to learn a hell of a lot about the markets. And regardless of your investment style, I'm very confident it's going to improve it. All right, so Rodrigo, I gotta start getting ready for tomorrow at 3. But if we got time for a couple more questions, I'd love to get them in.
Yeah, maybe we can do some tickers. Maybe you want to look at some stocks so that you can follow up on the trading school with those possible trades if it ends up coming out as one.
Yeah.
So the classes are ongoing. They're rolling. It's 8 chapters, but you don't go to college and on your first week of classes know everything. So it's pretty much structured that way, and the classes are live. So next year, obviously the classes we record them again, and they're going to be different because the market will be different. So we'll be looking at different things. So throw some tickers, guys, in the Zoom chat so we can get here Mark all fired up. Someone's saying PayPal. From Seth.
Man, this stock just does not seem like it wants to come back. I don't know. We get a lot of questions on PayPal. Now, a lot of times I say, I just don't see anything, which means it doesn't look to me like it's going to move imminently. I don't see much going on PayPal. What I do see is probably this level down around here. Let's call it 170. I don't know. Let's just call it let's call it 175. All right. So PayPal's been in this kind of death spiral. Apparently, I guess like the eBay PayPal service or whatever it is, has been taking business from them. So I don't see much, but as a trader, I think if we get down to around this 175 level, there's a good chance we get a bounce. And, for no other reason than if you look back here to last year, September and November, pretty much just over a year ago, that was an important level. So, I think if we get down there, we get a tradable bounce. But in terms of like PayPal's future prospects and that kind of stuff, I don't know enough about it to voice an opinion. But I think it's fairly safe to say if it drops to 175, it gets some kind of a bounce, a little bit of a tradable bounce.
All right. And next we got a firm from Leo. That's AFRM.
Yeah. Now we've had a lot of the students have been following this one. Let's take a look at the firm here. All right, so this here was a key level. Oops. Around 140. All right, so let's take a look at this. So we broke back below it. So, I mean, here's what I would be thinking on this stock, right? I mean, all right, so I mean, I don't know. I don't see anything here that's telling me we're going to get like a convincing bounce anytime soon. I guess maybe I'd be watching this level because, this was resistance. Maybe it'll be resistance again. I don't know, Leo. I just don't see too many clear levels here. But I will say, I mean, the action has been pretty weak. And if the market continues to go down, I guess the next question is like, where would you buy it? I don't know. I think maybe I would become a buyer of the stock down around here, around 108, right? See where it will support there. All right. So here's what I would be looking at. I'd be looking at this level here, 140 for potential resistance. I'd probably stay away from it. But if it breaks through 140, there's a good chance it keeps going a little bit higher. So that's where I would become a buyer. I'd also become a buyer for the opposite reason. Like if it got back down here to around 108-ish, which was support here, which, is not, it's only where it was like 2 months ago. It's not like a huge move. But yeah, so that's, I don't want to evade the question, but a lot of times with these newer stocks, it's just harder to find the levels because they don't have the history. But if the market continues to be weak and we don't see a rebound, and this thing drops down about 108, that's when it will come on my radar screen. It's like, all right, well, maybe there's a rebound imminent here that we could trade. So that's what I'd be looking at on the firm.
Okay. And I love a firm. I'm very bullish on that. I love it.
Yeah. And again, I'm just talking about like short term, like longer term.
Yeah.
I'm not talking about 5 years. I'm talking about like, 5 days or maybe 2 weeks.
Right. Trading. I mean, that's
Yeah.
what we do in the trading school. We're trading. If you want to invest, just go buy Apple and go to sleep and come back in 20 years. Then we have from Paul Carnival Cruise Lines, CCL.
Yeah, we had some clients made a lot of money off of this one. Yeah, so now this is going to be tough because of this whole COVID thing. But that being said, look at that. That's a pretty clear level there. Right? So it's going to put this right at $18 just to make it easy. All right, so look, $18 September 20 was resistance. $18 November of 20 was resistance. January was support. And look at where it stopped. literally that's right where it closed at this $18 level. All right. I mean, literally. So here's another example of an important level. It didn't close here, it didn't close here, it closed right where it was resistance and support. So I would put this on my radar screen. And I think if you like it long term and you think we're going to get through this COVID thing, which I do, I think it's probably a good time to buy. I mean, look how oversold it is, right? Look at that. The last time it was this oversold was in July. And it went from 19 up to 25. So look how oversold it is. It's basically as oversold as it was back when the whole first COVID panic came, like, March of 2020. But now when I look at this as a trader, to me, this looks like a buy because it's found support at an important level. Okay. Resistance, support, $18, and it's extremely oversold. So I would put this, and as a matter of fact, I am going to put this on my radar screen as a potential buy. Now, just to recap, big sell-off, but we found support at a level that had been important before. Massively oversold, meaning momentum. So it's like, it's almost like looking at it like this. It's like, all right, well, if COVID brings economic calamity, your money's going to be worthless anyway. But if COVID doesn't, this stock is probably going to have a pretty significant rebound, and I think there's going to be a trading opportunity. Now, the next question would be like, all right, well, Mark, you think this is a trade? Where would you look for a sell level as a trade? Not talking about a long-term investor, but, $20 was support and support. So there's probably a lot of disgruntled buyers who are looking to, bail out at break even. So there's a good chance there's going to be some resistance at 20. So, massively oversold, found support at an important level. If the markets, if Apple holds, like I talked about, and if Microsoft holds tomorrow or over the next few days, I think this thing snaps back and, gets to 20, which, it doesn't sound like a lot, but that's, that's over 10%, 1 or 2 days.
Yeah, it seems like these cruise lines always take a beating on the COVID news, but
let's try to get in 1 or 2 more, because then I got some family obligations I need to fulfill at the end of this holiday weekend here.
All right. No, me too. I have to go have lunch with my mom later. So, but we're here with you guys at least for a couple more minutes. All right. So we have Visa from Ashia.
So let's take a look at Visa. All right. So here we have, all right. So this looks kind of interesting, right? We had this big sell-off in Visa, and look where it stopped. Again, this is like, when I try to prove to people certain levels are more important than others, sometimes they don't listen. Well, look at this. Look at where this sell-off stopped. Right around 195. It's the same place it stopped in January. Probably oversold. So this is another thing where, again, it's like, if Apple and Microsoft hold and start to rebound, I think this thing snaps back too. You could get some play right here. Sold off and found support at a previous level that was important support. If it drops lower, if the market doesn't come back, next level is down around here, around 180, but it's yet another example of how a certain level is more important than others. So Apple and Microsoft hold, this could be another place to play rebound.
And if she is doing a quick follow-up here, if she should wait for Visa to cross the trend line before jumping on it,
Yeah. It's hard to draw trend lines when a stock is that steep, but yeah, I think that will instill a little bit of a discipline process, and this way you won't be guessing, right? So you can maybe want to put your trend line in like there. Um, Basically, the whole concept with the trend line is that you want to not try to catch the bottom. You know, you're going to be buying on the way back up. You're not going to get the very bottom price, but we're talking about risk reward ratio. If you don't wait for this trend line to break, well, it could keep going down. You know, just because it's out of support level, it's not a guarantee. So, so Ashia made a good observation. So we're at support. That's the setup. What's the trigger? Well, the trigger could be waiting for this trend line to break. That takes the guessing out of it. So yeah, I like that. I think it's good, a good observation.
Yeah, and I mean, this is something you do every day. So just, thanks for blessing here the people, at least for this period of time. Um, but this is something you do every day in the trading school. So I get it can be a little bit, maybe repetitive sometimes. But there's a lot of content education that you're going through on a daily basis there. So um, if you like to, trade with Mark and learn with Mark, right? See everything that he's doing, how he's going over stocks. Feel free to join the trading school. There's a Black Friday special today. Mark, I know you have to attend to some
Yeah,
things.
I got to
So
head on out, everybody. But
yeah,
thank you, Rodrigo. Thank you, dude.
no, you're welcome, man. And just as always here, if you have any closing remarks here, Mark, on on the school or the markets, whatever you want to leave the people here with.
Well, I think just to reiterate what we've been saying is that learn what the fundamentals are, and then learn how to apply those fundamentals to the market, understanding that the fundamentals don't change, but the markets do. And once we learn how to get comfortable with that, that's when we can really start to see some profits.
Okay. All right. Good follow up there. And everybody else, if you're already a member of the trading school, you already know where to find Mark. Well, well, Mark, thanks a lot, man, here for being with us on a Sunday. I'm going to stick around answering a couple questions, but thank you for your time here and appreciate all you do here for the retail guys.
All right, it's my pleasure. Thank you, everybody, for tuning in, and hopefully I'll see you tomorrow morning.
Sounds good. Sounds good.
Okay. All right. See you.
All right, guys. So I'm just going to show you a quick, um, let me know if you can see my screen. Maybe not. Okay, you can see that. Awesome. All right, so this is where Mark is posting the trade ideas. Just to give you a rundown, if you just joined or you weren't able to catch what we were doing here, Mark Putrino is a former hedge fund manager under Steve Cohen and Mario Gabelli, and he's pretty much focused on educating retail traders. That's what he's doing here with Benzinga as the chief educator for the trading school. This trading school recently launched September 27th so that all you guys, if you're learning to trade or maybe your P&L is not as good as you want it to be, maybe it's worth giving it a shot. There's a 7-day money back guarantee on this. This is the homepage. You click home, you have all the lessons there. Everything, patterns, investment psychology, Q&A sessions, everything is recorded. So Mike, only the trading school members get access to all of the recordings. And on top of that, you get access to all the boot camps, which I'll show you right now. So let me see where this is. All right. So this is Mark's trade idea room. Here you can see you have access to all the boot camps. What is Benzinga Boot Camp? It's a very amazing event that we have. We bring in people from different parts of the industries, and they go over the markets, right? We do sessions for like 8 hours, 9 hours. Here you can see Neil and Mark. They were there for this video. Then you have Mark Petrino. Then you have John Black, head of index options at NASDAQ. Joseph Cusick, vice president and portfolio specialist, Calamos Investments. Samantha LeDuc, founding member, Trent Spider there. Chris Capri, very, very well-known trader, amazing trader. Benzinga friend. Then Anthony Crudel, Futures Radio Show, Director and Client Development at CME Group, John Bria. Tim Court, Managing Director at CME Group, Global Head of Equity Products, Anne Marie, Ripster. I mean, you have all these Benzinga boot camps. They're available to you if you join the trading school, right? And you have access to all the recordings, right? Get the recording right there. You have them there. It also comes with Benzinga Pro, which is what I'm showing you right now. It comes with all the charts, the trading view charts. You don't have to pay for that. It's included. You have this new tool called Insiders. Where is that? What I'm showing you right now, this is the Insiders tool. So you can see when multiple insiders are buying. You can see when an individual is buying, and it shows you the percentage that they own, the quantity, the price, the size, their title, who they are, right? If the CFO, you see it tells you CFO and treasurer are loading up on stocks. That's pretty bullish. Senior VP and COO and president are buying stocks. If everybody in the board of directors and everybody else is buying stock, then it seems like they all know they're doing well. So, or they believe heavily in the company as a group. So that's very bullish. I'm not saying to go buy everything here, but if you want to find trade ideas, Pro is your best friend. You have insider purchases for individual people buying, penny stocks, same concept, only that apply to stocks under $5. Then you have insider sales above 100 grand. If you're looking for short trade ideas, this might be a good place to start. You have your calendar where you can, separate it by earnings, analyst ratings, dividends, economic numbers, FDA numbers, IPO, M&A, retail sales, splits that are happening, and you can filter this by your watch list. Okay, so build your watch list and customize these tools to what you are trading and ignore the noise. This is the normal chart. I went over that already. We have a scanner. It's the only scanner that's open basically during pre-market and after-market. So we are aggregating the data for you during pre-market and after-market. A lot of the other brokerages only do this during regular trading hours. So you're basically ignoring half of the trading day. And if you are starting to scan for trades at 9:30, you're way behind the 8 ball, my friend. You need to get the tools if you want to be successful. If you want a business and you want to make it, you can't just try to free your way into success. It's not going to be easy, and very likely you probably won't make it. Like 90% of traders fail in their first year. So the difference is you having the right tools available to you. And many years ago, this was not available to retail until Benzinga pretty much broke that status quo and started helping retail traders, including myself, to become more successful in their trading by giving us access to this data and everything here. So it's built inside Benzinga. This is all done in-house. This is not outsourced or anything. These are our tools. This is our code, our technology. Also, we do breaking news on stock. So if a company wants to release news, they love coming to Benzinga to do it. The main reason is because we are very, very connected, right, with the retail market, because we are retail traders and our goal is to help retail traders. Nothing that you're seeing here is aimed towards helping big hedge funds or anything like that. If you notice, our focus is to help the little guy. That's who we are, that's who we help, and that's why we're here. So as a retail trader, all these tools help you, right? Finding breaking news on stocks, right? And getting the facts, getting clear news, right? No bias, no opinions planted in anything. You get straight up, news from the company. And that's why they love doing the Benzinga exclusives with us, because they want to reach you and give you their message as clean as possible, right? So these are all the stocks that have done Benzinga exclusives, meaning we break news for them. And you have access to this before other people do in other brokerages as a Pro member with the trading school, right? Because Pro is included in the trading school. And there's a bunch of stocks that we've done PRs on. I'll show you one. BBIG, I know a lot of you guys know that stock. We did a PR way back for them, like literally when it was like about $2, $3. Went up to 13. Another one that I like a lot, Alf, the like technology here for like Ubers and stuff. PR comes out, in this range that you're looking at here. between $4 and $6. I mean, you see the jump right away. You can look at the jump almost immediately, right? From $3 all the way to 23. I mean, I don't know what more do you want, honestly. Another one that I love, EHR. This is a chip company. They're a US chip company. I think Luke from Power Hour has had them as a guest, and they broke the news with Benzinga. I mean, geez, 1,000%. Like it's so we bring you the news that matters, right? We break all the news that matters. We give you the tools, right? We give you the scanners, right? We give you the like everything that we can, calendars, insider tools, and all these tools that you see, we build them from scratch. They're not, in a shelf waiting for us to give them to you. We are constantly building and developing the products here nonstop because that's our goal. It's not like set it and forget it. We have a mission here. So we are working on adding more features, not just to the pro side, but also to the trading school side. So now you have all these cool things. Everything I've shown you right now is included with the trading school, right? The boot camps with all those people I mentioned, pro with all these features that and more that I've shown you, and of course the trading school, right? The live classes, the video libraries, the trading chat rooms with Mark. This is all possible because we have a lot of great developers here that focus on helping retail traders, and we combine that, right? Retail traders talking with coders and developers to bring you the best tools. So I'm your advocate here. I'm here pretty much to help give you guys the best value out of this and show you how to use it. So you're welcome, guys. You're welcome. US markets from, all right, let me get to some questions now here. Yeah, Eric, the YouTubers, I mean, it's true. Okay, you're saying you were a victim of following these YouTuber kids, right? I mean, it's easy to fall into that, man. It's easy to fall into that for sure. But Mark Putrino is not a YouTuber kid. He's a former hedge fund manager under Steve Cohen and Mario Gabelli. So you see total different sides of the spectrum, the way that he looks at the market and the way has a YouTuber pump and dumper looks at it. All right, let's go over a couple more here. Ned, we have a 7-day money back guarantee. I mean, yeah, there's no question. If you want your money back, you get your money back. But it would obviously be very, very appreciative of your side if you can give us some feedback, because we'd like to know what we can improve here, right? If there's something we can do that we can work on to improve the product, let us know. We'd love that. Feedback is always appreciated when it comes to product development here, guys. So US markets, any offers for existing pro members? Yes, yeah, we do. You have to email. I'll put my information there in the chat, so you can go ahead and email me, and we can get the ball rolling with your request, Mister Haggard. I already signed up for the chat and pro separately. I'm curious to know what Haggard, reach out to me. I put the email there. You can call me. That's the only way you guys can get this deal is if you call me or email me, or you use the link that's in the description. Yeah, and if you guys have questions, right now is the time. Right now is the time to ask your questions about trading school or whatever it is that you have questions on. Mike, is there a way you can watch this again? Yes, if you join the trading school, you do have access to all of the sessions that we do. This is like the 50th, well, not 50, but like I've probably made like more than 15 or 20 of these sessions with Mark, and they're always fun. They're always engaging. We're always talking about different things in the market, and they're educational lessons within. So from Mark. So yeah, if you join, you do get access to all of the sessions that we've done. And right now we just did like a 2-hour one, but back in the day I was doing like 3-4 hours. So it's a lot of content that you guys can get with the trading school if you join. Yes, all right, let's go to one more question here. Michael, I appreciate you too, man. Seth is saying, will the renewal happen at the same price current as the Black Friday price? Yes, Seth. This is a lifetime discount. We're only doing this for Black Friday. All right. We're only doing this for Black Friday. If you sign up today with the link that's in the description, you keep that 70% off forever. Every time it renews, on an annual basis, you keep that 70% off. instead of, paying the full price, right? So you keep that discount forever. Aisha, when does Black Friday special end? I mean, we already extended it. It's Sunday. I wouldn't wait any longer, to be honest. And I forgot to say, we're throwing in a laptop, guys. All right. There's so much stuff here that sometimes I forget to say things. Sometimes I forget because there's so much in here. Um, Vince, you're sold. Well, I mean, it's your P&L that's going to thank you. So thank Mark for that once you join the school and everything. So there is a laptop included. And basically that means that you keep that laptop. You're not renting it from us. You're not leasing it from us. It's something that you keep. It's a complimentary gift, a Google Chromebook that we're going to give to you guys just as a courtesy, right? Just as a courtesy. So also shout out to, everybody that works and helps, right, with all these things, because there's so much included, like I was saying, that sometimes I forget everything that this comes with. Shout out to Timothy, shout out to Gian and Joseph for joining the trading school and just joining the family right here with us. Love it, guys. Love it, guys. I wish something like this existed when I started, to be honest. I know my P&L would definitely thank me. So do yourself a future, right? Get the education with Mark and get everything else that's with this, right? Get the laptop, get Pro, get the bootcamp videos, get the live trading chat room. And I forgot to mention also this chat room I'm showing you now, which is Mark's trade idea chat room. This is separate, right? The chat room by itself for Mark costs $6,000. You're not even paying for that. That's also included in the trading school. So many things here for you guys for the Black Friday special. This is the general trading room that we have where all the members are posting their trade ideas, their questions. Mark pitches in as well if you got something for him. And remember, you got the live classes with him as well. So you're getting so much contact with Mark. What's the last time you talked to a hedge fund manager Monday to Friday, getting his picks on a chat room and getting taught by him it's out of this world, guys. So there's a lot of information here. There's a lot of good things you can learn. This is only going to help you. This is meant to help you guys. So Abu, let me post the link there. 1 second. I'll post the link in the chat room. Hold up. Yeah, so that should answer your question on the laptop, David. Ashia, any Forex concepts tonight taught? Yeah, I mean, we just went over many of them. Look, it's always people behind the machines buying and selling. It's not like these are aliens, all right? They also experience and look at similar things. And that's why learning from a hedge fund manager, former hedge fund manager, is going to help you because those are the people that move the markets, not retail. So everything that you're looking in Forex and crypto and options, all that stuff, this is where you need to start. Okay, you don't just go to a master's class without even graduating high school, or at least without even graduating, your bachelor's, right? So there are steps, guys, to get to where you want to be. Skipping steps is only hurting you. All right, don't try to skip the steps because the most important steps are always the first ones, and some people overlook them and just want to go straight to the action. And that's why I hear these stories every day on the phone of people losing $500,000, like literally in about a couple of years because they just went into the market thinking they could wing it. And like, come on, guys, we want to encourage responsible trading. We're not encouraging YOLO or anything like that in the trading school. Mr. Bakar, you're asking if we have anything for crypto. Yeah, we just went over concepts that you can apply as well to crypto. This can apply to anything that you're trading. I don't care if you're trading commodities, Forex, stocks, options, especially options. If you guys are asked, like, if you don't even know what a call or a put is, and you can't even read a chart, like, why are you going there? Like, before you ask yourself, like, should I buy a call right now? Maybe you should ask yourself, can I really read and trade the charts? Because if you can't, then you're just going to lose all your money with options. At least with stocks, you'll have a little cushion, but with options, man, you'll blow up for sure. Vladimir, yeah, I got your email. Guys, this Black Friday has been insane. I literally woke up, I had like 100 emails, 200 missed calls. It's just been very busy here. So sorry, Vladdy, but I replied earlier, but I'll make sure to get back to all you guys today. You're welcome, Benjamin. You're welcome. Makar, you're welcome too, my friend. John's asking, can we, John, you'd have to talk with, well, I mean, I'd have to ask them. I'll definitely ask. But I know that it's an open ticket that they're doing on Pro. You see, there's like so many things in the pipeline. It's not just one thing, you know, because everybody wants something different, right? Joe here wants this feature and Tim wants that other feature, and everybody wants features, and we have to organize it into pipelines of, you know, coding progress. So it is something that is in the queue, I can tell you for sure. So, hey, Rashad, you're welcome. All right, guys, if anybody has any other questions on the trading school, let me know. Right now is the time before we do close the stream, guys. Throw your questions before I end the stream here and I can get back here to, you know, going over a couple emails. Let me know. I'll be here for a couple minutes more. All right, Joe, I'll drop the link there one more time. I'm dropping the link here. Anthony just Persich. Okay, can you send me an email, Anthony? I'll make sure to see why that you're having that issue. No worries, man. No worries. I mean, yeah, we've been like so not backlog, but like it's just Black Friday came so hard. People were just, you know, waiting for this day. So everybody waited to call me on Black Friday. So, but we're gonna help you out with that. Just can you, if possible, Anthony, give us a call tomorrow in the morning. I'll make sure I'll get you here with one of our technical specialists to, you know, see if there's an issue there we can help you with on that. Ron, yes, it is possible. Just make sure that you email me so that I can, you know, get that done for you. I'll put my info there one more time, guys. Does Mark cover day trading or swing trades? Leon, everything that we went over is applicable to both and more. It doesn't matter what strategy you have. You need to buy low and sell high, right? It's pretty simple concept, but even if you're day trading, you know, you can use these lessons for day trading. This is not a school that's going to tell you this is how you have to do things. Like this is the type of trading. This is the style of trading that you need to do. We're here to show you the fundamentals so that whatever strategy that you're using, you can improve upon. So we have day traders, we have swing traders, crypto, forex, options, commodity, metals. We have traders from all, you know, from all sides of the coin. So this is applicable to anything, to anything. It doesn't matter what you're trading. Normal price Tamra is 4,000. And I mean, that's really leaving out several things like Mark's chat room, which is 6,000 by itself. The boot camps, it's leaving out a lot, but yeah, so it's 70% off today. In reality, it's more like 90 something percent off if you ask me, like with everything it has. So, but this is the Black Friday special. So, and you know, we are at Sunday, so I don't know. I wouldn't risk it if I were you. I don't know if that laptop's going to be there. If you don't see a laptop in the checkout, guys, that means we're out of laptops. It means we're no more laptops left. Hey, Anthony, no worry. I'm putting the, okay, you got the link. Make sure you're using the link here from the chat so you don't so you don't get anything like something different. I'll post it there one more time, guys. All right, so this has been fun, guys. It's Sunday. I have to go have dinner with my mom. So I appreciate you being here. I have to attend this thing, and um, be sure to join us in the trading school. Be sure to join us. We're there every single day, Monday to Friday. It's fun. Mark is always, you know, chop and trade ideas, going over the markets, and you know, you can ask any questions you have. So feel free to join, guys. 7-day money back guarantee, and reach out if you do have any questions, and we'll be more than happy to help you with that. So thanks a lot, guys. Thanks for being here, and we'll see you guys next time.